Morning everyone, welcome to the morning report, Thursday 14th of April. I think today unfortunately is going to be one of those days. The famous economists and researchers are saying, well, we're waiting for this piece of data, right? So today, in the next 24 hours, I think we're going to get a much clearer vision of where some of the markets are going to be for the next few weeks. Now, we've got big data coming out, right? So as you can see, I think there's three important pieces of data. We've got Bank of England MPC, we've got the US CPI, and we've got the China GDP, each important for different reasons. I think from a Bank of England MPC perspective, just think about the EU referendum coming up in June. It is highly unlikely that you will see anything market moving from an MPC. I know they're not politically connected or have any motivation politically, but they're not going to cause any issues in the market by raising rates. Certainly, I'm talking about raising rates. From a US CPI perspective, think about what the Fed was saying. So that's due out later at 1:30 London time. They're expecting a 0.2, so slightly higher than previous CPI. This is mainly because of the energy prices going up. We already saw that the UK CPI was slightly firmer, and I expect that not just going to be impacting the UK, it's going to be impacting multiple different economies, right? So big data. This is it, right? So US CPI and jobs. If US CPI starts to look as if it's going to hit its longer term or medium term inflation targets, we will see a big move in treasuries, and not just in treasuries, in the shape of the treasuries curve, right? So a little bit later I'll talk about how that impacts for you non-treasury traders, but it's very important to understand this is a big piece of data that can set monthly ranges and the tone of the market. Then overnight, when everyone's asleep, we've got the China GDP, right? So we know that this number's coming down, coming slower and lower. The market, the entire world is hoping that China growth doesn't drop below 6.5%. It would be a huge surprise if this was above 7%, and very supportive of equities and a big sell-off in treasuries, right? So we got lesser extent MPC today, but we got US CPI, and I think the surprise one could be the China GDP overnight, right? So we had exports and imports, better data out of China the other day. So these are big pieces of data for us to look out for. What I want to talk about this breakfast morning, since there's not a lot of market moves, the curves are all particularly quite flat, waiting for later, is what to do. What I do when I first come in the morning, right? So this is just the first stage, and there's a lot of you that trade Euribor, LS, not so many of you trade Eurodollars. So when I was trading Schatz and Bobble and Bunds outrights, okay, and this is no different from you in your Euribor's curves, right? So what I was doing is making markets in the outrights, right? So even before and this was in a time where the Euribor and Bund and Bobble shut at 6 o'clock, right? So now there's at least a 6 o'clock to 9 o'clock London time trading market, right? So what I would do is I would get a really good idea of where the Bobble and the Schatz would be trading based off of what happened overnight in the treasuries and the Eurodollars, right? So bearing in mind I would be trading Schatz and Bobble against one another and Bobble and Bund against one another. So basically, without exception, I needed to see what had happened overnight in the US markets. We never had a squawk, right? So basically the squawk was you making the analysis and looking at the charts. So what I've done, I've broken down, and only on a daily perspective. Tomorrow I'll talk about more intraday perspectives and real subtleties and how these types of this type of analysis can be used to your advantage, right? So what I've got here, I've done my infamous scatter plots, right? So what I've done here, I've collected some daily data on the June 6, June 7 for the Eurodollars, for the Euribor, and for the LL, for the short sterling. And I've plotted them against one another, right? So if you think that, and this is no, I'm not judging you for thinking that, but if you think that the Eurodollar curves don't impact your, or completely dislocated from your Euribor and your sterling curves, well, please think again, right? So what you got here, you've got the bottom left, you've got the Eurodollars June 6, June 7 against the Euribor June 6, June 7. Now, there is of course, some of these numbers are negative, some are positive, but what you can see is there is a clear, it's quite noisy, right? Because it's a daily plot, but you can see a clear trend that if the Eurodollar spread is going higher, you'd see a gradual upward trend in the Euribor June 6, June 7. Now let's look at the Eurodollars to the short sterling. A little bit clearer, right? So over time, a very long period of time, Eurodollars and the US and the UK economies were a little bit more connected than the UK to Europe. They're much tighter in their economic cycles, right? They're not purely exact overlaying, but they're much tighter. And you can see that in the data. What you can see here is that when one of these spreads, one of the June 6, June 7 is going up, you're seeing a clear trend in an upward trend so as Eurodollar spreads going up, the LL spreads going up as well. And conversely on the way down. And then what I've got here is the short sterling over on the right hand side, the short sterling to the Euribor daily. As you can see, again, a clear trend. If the LL June 6, June 7 is flattening, you would expect to see that in Euribor. Maybe this is obvious to you, but the point is I want to go and look at the Eurodollar curves overnight to give me a feel of, because when you open, right, there may be some clear edge in the opening hour that if you're just waiting for the ranges to settle, you're never going to be able to take advantage of what those opportunities are. So on this slide, I've gone a little bit further down the curve. So I've gone down to the June 7, June 8 for the Eurodollars, Euribor and sterling. As you can see, same charts, same daily scatter plots, a little bit clearer, but you can see there's clear evidence that if overnight there's a move in Eurodollar curves and Treasuries curve. This is why when I'm talking about the Eurodollar and Treasuries curves, I want to see the shape of the curve. This is why. So this affects all of us, okay? Intraday, you get European data, you get UK data, and they dislocate a little bit. But first thing in the morning, that's where and why they open up. Again, what I've done here is go a little bit further down the curve, right? So there is lots of things to be considered when you're looking at further down the curve. Certainly the first thing would be liquidity, right? So as you know that in the Euribor, anything outside the green spreads gets really illiquid. Anything in the short sterling outside, really the greens starts to get really illiquid itself, but you know, there's no real thing as blues and golds in short sterling. That all trades OTC. There's pricing, but in terms of liquidity, it's not really spoken about. But in Eurodollars, you get deep liquidity going out 7 years, right? So there's a big difference. So from a liquidity perspective, there is a difference. And also what you get is the further out the curve you go, you're less driven by, you know, the 10-year note, so or the 10-year note future or the Bund and the gilt and that price action affecting your curve, i.e. Bund's up, curve flatten at the very front. So what you start to see is a dislocation in these particular products, from the Eurodollar June 8, June 9 to the sterling June 8, June 9 and the Euribor June 8, June 9. But you still see evidence of that they are correlated. One goes up, the other one should go up, right? So this is again where the back end of the curve, you know, looking at the charts. So this is why I look every morning what happened in the curve between 6 and the next morning. So from 6 where the short sterling closes, and first thing in the morning, like what happened in the curve. There's some other or many other things we can look at. So, for instance, we can look at the FX forwards. We can get a feel on potentially how European markets have moved. We can see that in the pricing. But just as a first point of call, just so I didn't want to get too long in this presentation, is you look at the US curves first thing in the morning, right? Because nothing's happened, there's nothing going on, right? So that's why I'm not really talking about anything in particular. And just to reconfirm that, right? So what you got here, this is your 2s, 10s US curve. Treasuries are up a little bit, so this is down a little bit, as you would expect. 5-year, 10-year note, this is flatter a little bit. Well, yesterday, if you 10-year note to ultra 10-year note, because that's down a little bit. And again, on the 10-year note, which is a 30-year note, that's slightly offered, right? So ever so slightly around unchanged. If we were yesterday, and this is where the curve shape is so important, right? So if we were yesterday, I mean, the treasuries are up a little bit, right? You would get this is all flatter. The entire curve's flatter. Now, yesterday, it was very similar, right? So, i.e., the outrights were going down and the curve was flatter. Today, the treasury is up a little bit, but the curve's flatter, right? So, this is where the subtleties of the curve and knowing what to look for, why to look for it, what's driving the prices. And if you don't know what's going on, where to go and find that information in other spreads to help you. We'll visit that. So what's really important, hopefully you've watched this to the end, is you let me know what parts of this you're interested in, and then we can build presentations around that. Thank you.